Hey, what's going on, guys? My name is Richard and welcome back to another stock market outlook video. As always, we'll go through the analysis of the major indexes, the leading stocks in the market, as well as look at how my previous watchlist performed over this past week. And we'll also consult the IBD Big Picture article, as well as the GMI signal from wishingwellblog.com to determine what the current trend of the market is. And then, based on that trend, you should decide how aggressive or defensive you want to be in the market next week. And as always, if you enjoy my analysis, please go ahead and leave a like down below. It really does help me out and my channel. And if you're new, go ahead and subscribe to the channel if you want to see more videos just like this one. But getting right into it, we'll start with the Nasdaq 100 on a daily time frame and take a look at these channels right here. And if we actually go to the QQQ, I've drawn several instances where it's breached the top, been pushed down, but also breached the bottom and has been pushed up. And if we go to this current week, you can see we had a big downside reversal on Monday where it was outside of the upper trend channel line and then got pushed down and is now sitting in the middle of the channel. So in my mind, this was productive. We were getting a little bit ahead of ourselves and we needed this slight pullback. Going back to the Nasdaq and looking at a weekly time frame, you can see that overall we had a negative week. We were down 1.76% with a weekly closing range of 39% and a daily closing range of 70.9%. So overall, this was a down week, but it was constructive. As I said, we were getting a little bit ahead of ourselves and we needed this pullback. And overall, this closing range is near 40%, which indicates institutional accumulation and support. And going over to the S&P 500, you can see that we actually had a positive week, up 1.25%, which is very strong. We did see some rotation into the S&P 500 stocks and IWM stocks last week, which is constructive because we want this rally to be more spread out and not just include those technology stocks. And overall, you can see we had a nice upside reversal and the weekly closing range was a very strong 87.75% with a daily closing range on Friday of 68%. And if we go over to the IWM, you can see that we actually retook the 30-week moving average. So we're no longer in a stage 4, which is very constructive. And we also had a very strong week, up 3.74% with a weekly closing range of 86.98%. So it's very nice to see, as I said, the rally kind of broadening a little bit and not just including those software tech stocks. And overall, we're no longer in a stage 4 on the IWM or on the S&P 500 and also on the DIA. And we actually had a green dot and overall we were up 2.27% for this index. So overall, very constructive action from the major indexes on a weekly time frame. And from those kind of weekly bars, the expectation is we either go higher or go sideways. And now checking out the Nasdaq on a daily time frame, let's go through the price action of the week. So Monday was pretty much as bad as you can get. We had a big gap up, but it didn't hold. And we actually tried to go all the way up to 1100, but we're knocked way down and overall closed the day down 2.16% on higher volume than the previous day. And from this, the expectation was that we go lower. And that's why this Tuesday was so strong, because this really showed that the bulls were in control and that they're going to support this rally. So we gapped down, went all the way down to 10,300, but then had a strong finish closing right near the top of the trading range. And you can see that overall we were up 0.82% for a very strong upside reversal after a dip down near the 21 EMA, which is this purple line. And then on Wednesday, we kind of had just kind of a normal day, a slight gap up, a move down. But once again, we had a decent closing range in the upper half of the trading bar. And then on Thursday, you can see we did gap down, but overall this was still a positive day because of the closing range, and it kind of reverted to kind of normal price action. And that action carried over into Friday, where you can see all the trading range was confined within 1%, which is strong. And overall, once again, we had a nice closing range, the upper half of the day. So from this price action, we are expecting that we either go sideways or up. But overall, this was a nice pullback and definitely needed in the tech sector. And now going over to gold, we'll see how they're performing. You can see that after the breakout from this high right here, you can see it's been trending upwards. All the moving averages are moving up. And since kind of 2 weeks ago, it's pretty much been going sideways. So it looks like it's setting up once again to move higher. And taking a look at the VIX, the volatility index, you can see that overall we had a down week. If we go to a weekly bar, you can see we are down 5.9%, which is a promising sign. And overall, you can see after this bad Monday, we just declined throughout the rest of the week, which is very constructive. And overall, we're at 25.68, which is pretty low, and we're getting down there. But as I said before, I want to see us get below this low of 24.92 and eventually this low of 23.54. That would be ideal for trend followers. And next up, we've got the FFTY, the Innovator IBD 50 ETF. And overall, this kind of reflected the charts of many of the leading stocks. A huge downside reversal on Monday, then constructive price action near the 21 EMA. And overall, the weekly closing range was 44%, which is decent. And overall, the daily closing range on Friday was 87%, which is quite strong. And lastly, taking a look at the XLF, you can see that overall, it still isn't making its way towards this prior line of resistance right here, but it did have a constructive week. And if we go to a weekly chart, you can see it was up 2.09%, and overall the weekly closing range was 60%. So decent action, but I would like to see the XLF kind of take over this declining 30-week moving average and no longer be in a stage 4 decline. So that is the major indexes, and now let's talk about the potential true market leaders. And if we sort by this weekly change right here, and let's go to a daily chart, you can see that a lot of them were hit very, very hard and had constructive pullbacks. But for the most part, the damage was contained to the 21 EMA. If we go to Twilio, you can see it found support right at that level and actually had a very strong Friday and actually did buy some on this Friday. The daily closing range was 93%. That's very, very strong. And overall, a lot of the leaders really look like this chart right here. And a lot of them are showing daily stochastic crosses, the shorter term teal dots on this past Friday, which is constructive. And you want to see this continue to move up and then challenge those previous all-time highs. But some stocks were down 10, 15% and definitely need a little bit more time. Fastly was hit very hard and still isn't showing signs of it resuming the uptrend. And CrowdStrike is also kind of suffering. And the ones that were down on this Monday on above average volume. So let's find one right here. SC was okay. Shopify, you can see how it was down on larger volume and it took out the lows of the previous week. That definitely is damage, and that is an indication that it might need a little bit more time to form another base and then kind of constructively shake out those weaker holders and eventually break out once again. So don't just rush into these stocks because they seem cheap at this moment. Wait for a proper setup and practice good risk management. But overall, the strongest among the true market leaders, SGen was actually up on the week and actually had a green dot on this past Friday. Twilio, as I said, had a very strong Friday after a nice recovery. And Vive and Coupa also kind of stood out to me, showing great RS, as well as LVGO, which is continuing to act very strong, holding that 10 EMA. And Tesla as well is holding that 10 EMA and coiling up once again. If we go to a 65-minute chart, you can see that's been very, very tight on the past few days, and look for this to break out ahead of earnings early next week. So that's kind of my rundown of the true market leaders, and overall they were hit hard, but for the most part they're holding those 21 EMAs. So that's it for the true market leaders, and now let's talk about my previous watch list. And if we sort by weekly change here, you can see that we only had 6 that were positive on the week, as a lot of growth stocks were hit hard, but there were some good constructive charts in there this week. And SITM really stood out to me. It had a great breakout on Friday after holding very strong early in the week. You can see the uptick in volume on this Friday, so this would have been a great entry point. And I actually didn't buy this on this past Friday, but overall is a very promising young IPO and could move decisively higher. Looking onwards, we've also got PFSI, which bounced off nicely this green line right here, which provides support and moved higher throughout the week. Amgen also moved higher after breaking this downward trend line right here. And Lulu also showed a lot of strength and actually had a green dot on this past Friday. So this pullback that we saw in growth is presenting a lot of viable opportunities and setting up a lot of strong stocks for another move higher. So don't take every pullback as a negative. They do present buying opportunities in the strongest stocks. And also taking a look at the weakest stocks on this list, you can see Team sliced through the 50-day moving average, which is a huge negative on big volume and continue lower throughout the week. So for me, this chart is kind of broken at this point, and really it has to prove itself, retake that 50-day before I would be interested. And I actually did get a comment about this stock. Somebody had bought at 185 and hadn't sold yet, even though it's broken down, and they were asking for my opinion about what they should do. And first of all that I say on this channel is for educational purposes only, and I can't tell you what to do, and I'm not certified in any way. I'm just providing kind of my thoughts based on my own experiences. But I will say that if I had bought it on this breakout and it continued to break down like this through the 50-day moving average, I would be selling and cutting my losses no matter what. Even though this company, in my opinion, has great numbers, nothing matters unless the price action is reflecting that thesis. So those are my thoughts on Team, and XP as well had a negative week. You can see it broke through the green line, which is a negative, and I want to see this retake it early next week and really pull back strongly and retake those shorter term moving averages. And lastly, we've also got Bill, which was the third worst stock on my list. But you can see even after it pulled back, it presented a short-term stochastic dot on Friday, as well as a lower Bollinger Band bounce, which could indicate that will move higher early next week. You can see that on this pullback, it was on lower volume. So that is a brief rundown of how my previous watch list performed, and make sure you guys tune in tomorrow on Sunday when I'll be posting my next one. And with that said, let's go ahead and check out the sentiment surveys that I post on Twitter. So the most recent one that I posted yesterday, you can see that we're 51.3% bullish, which is still a little bit high for my taste. You can see that anything over 50% is a cause for worry and could indicate a potential pullback. And last week, you can see we're at 54.5%, which was a big jump from 43% the week before. And potentially that's why we had that pullback in growth last week. People are way too bullish at that time. So even though it is extended at this point at 51%, we are trending in the right direction. So with that said, let's go ahead and check out the most recent IBD Big Picture article from Investors Business Daily. So overall, the headline is Stock Market Bulls Cheer Quiet Session and Growth Stocks Bounce Back. And reading the article, they talk about how the top-rated growth stocks rebounded nicely on this past Friday, despite the pullback earlier in the week. And they discuss how even though the Nasdaq fell 1.1% for the week, that's after it gained 8.8% in the prior 2 weeks. So in context, it's not that bad. And they also talk about how options expiring Friday probably led to the volume being increased. And they also discuss a couple of the stock market leaders, the coronavirus stocks, mRNA, NVAX, and INO had very strong weeks. And they talk about the biotech stocks, the bank stocks, which reported. And scrolling down, they also talk about some top software stocks, which are potential true market leaders in my mind that you should have on your watch list, such as DocuSign, Coupa Software, DDOG, Viva Systems, and Fastly. And overall, you can see that their view is that we are still in a confirmed uptrend, and we have 3 distribution days on the S&P 500 and now 1 on the Nasdaq. So still relatively low numbers in this strong rally. And lastly, checking out the GMI signal, you can see we are still green since April 27th, and the current GMI score is a strong 5 out of 6. And Dr. Wish's most recent article talks about how the SPY, DIA, and QQQ are all in strong red, white, blue uptrends. So all in all, my view is that we are still in a confirmed uptrend at this time, and I'll be looking to add back positions that I sold earlier in the week. So that is it for the video. Thank you guys so much for watching. If you enjoyed, go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.